Alright, OBS, let us continue with the pivot pattern of VPA. So the pivot pattern is going to be important for confirmation. That's how I use it. But the way Anna described it, it's a little bit more different because, again, we're dealing with three different time frames. The primary cycle, a secondary cycle, and a micro cycle. You've got to choose three different time frames. If you're a scalper, you should choose the 5, 15, and 30 because those are they're good time frames. If you're a swing trader, use the daily, the weekly, the monthly. It's really that simple. I mean, if you want to add some more time frames, be my guest. I mean, I've got a lot of them myself, but for this specific pattern and strategy, you're going to want to use three primary degrees, 5, 15, and 30, scalper, or daily, weekly, monthly, swing trader. So there's something called the pivot high and the pivot low. It is a reversal pattern. It's a temporary pause and major reversal in the main trend. The pivot high or low pattern forms a consolidation pattern. Okay, it's actually named, she names it a congestion, when it's basically a pause in the main trend, or it could be a reversal, right? So we'll get into the pictures a little bit later. So when zoomed in on a smaller time frame, like the micro, what we're talking about, it actually shows image below. It forms a type of a range or an MM pattern until supply and demand is strong enough to cause it to break down. So again, the MM is the measured move theory, and just to give you a little bit of an example here of exactly what it is, here's the MM. Okay, so this is the setup that we would be focusing on. This is great RR setup, and there's, you know, the explanations are going to be in the next series of MM. If you guys are interested, this is a really good strategy, by the way, because you can also measure supply and demand through this. This is the whole concept of the markets. So the measured move, this guy, a $100 book, David Halsey. David Halsey is his name. Respect to the guy because he's got a lot of good stuff, and he understands that accumulation phase is down here, and then distribution phase is up here. Okay, up here. So that's how he looks at the market, but his strategy is to follow the smart money, just like we are intending on. That's our strategy in the VPA as well. So it doesn't change. Okay. So again, as the image showed below, it's a type of MM pattern. See how it's a little bit similar? It's exactly pretty much, this one looks like golden range. So this is the pivot high, stage 1, pivot low, stage 2, congestion. So it will form a range or it'll just break out. So what it looks like on a higher time frame, it looks like this. Does that make sense? On a higher time frame, it just looks like a candle that's pulling back. So that's why it's important to have three different degrees. So anything else that we can say here, zoomed in, the smaller time frame. I'll say one more time. Okay. So Gann has a rule of 3. Okay. And you can also use the pivot low right here as a stop loss. Okay. This candle here probably had a lot of volume on it, a narrow candle, right? Like on our other videos that we had in this series. This is a widespread candle with decent volume probably, and this is a narrow candle, bull trap, lots of volume on it probably, or decent volume, enough to cause the market to come down because there's too much resistance, too much supply selling. It came back down, and it's forming either the 50% or the G-spot, the golden ratio, in the trend, right? So here's the higher high. It's definitely a higher high, and Gann says always look for higher lows and higher highs, and higher lows and higher highs. This was a lower low. This is a bearish setup. This is the bullish setup in a higher low. So again, it's a congestion. So it's a little bit of a pause. For some reason we had resistance. Let's say it's part of a resistance or Fibonacci. Something caused it to go down, right? So that's the law of cause and effect. Effect was the price action, and here's the next cause, right? The next cause is another entrance in the trend. So our initial congestion price is now defined. So now we have a range. We have a range that we are looking for the 50% to break and continue upwards, or a real reversal to the downside. So this market structure gives us a clear defined platform of future price region of support and resistance. And depending how much time it actually takes within this range, the more pronounced it will become, the more important it will be in the trend later. And you'll find that in micro congestion phases, as well as obviously the bigger time frames have more congestion, more volume, more trapped traders in it. So that's typically why, or the thinking behind this pattern. So future price regions, support and resistance. Just like we covered in the last video, the support and resistance, how this one will become the ceiling of resistance, and this one becomes the floor of support. Just call this support and resistance. Okay. But I mean, or a top and a bottom, tops and bottoms. So that's actually a better name for it. But it's a different thinking, right? A different word equals different thinking. So like attracts like. You gotta know your market. You gotta know who is trading this market and what kind of people they are. How do they talk? You know, what strategies do they use? How do they think? That's how you're going to tap into the mind of the market, is what it's called. And that's why, again, we're starting this Discord group, because we want to tap into the mind of the market. And if we use our brains together, we can figure it out. Okay, we can figure it out if we use our brains together. And so you want to see a clear breakout of the ceiling of resistance, the price holding above the breakout. This you will generally be the start of a new trend caused by volume. So it's all about the cause, right? The cause. Look at this one. This is a downtrend, right? 50% entry coming downwards. So these guys don't know each other, but they're using the same principles of the markets, right? So it's important that 50% or the G spot, you know, golden ratio type deal. So what were we saying here? Market structure, define, right. So the reason why I said it helps with trade management is because if you're using the order book as well, it's a huge helpful tool. The David Halsey is really big on using order book, because you get to see the money flow confirmation, and you should definitely use it with VPA as well as a confirmation. But she didn't get into it. She didn't talk about the order book like David Halsey. So, but it helps with trade management because you can put a stop loss right above the pivot high. Right, you can put a stop loss above the pivot low, and then you can target trend following strategy. So you want to see a clear break of the ceiling of resistance, and that's where we would get our target, right? Or if you use the trailing stop loss strategy, it depends what market condition you're in. Sometimes, like Bitcoin on the 15-minute chart, when it's consolidating or excuse me, slowly uptrending, you'll find that the measured move works so well. Like for example, this downtrend right here, like you can have multiple trades, right? And you enter the 50% golden ratio. If you do it right, you enter it and then you exit right there to take profit. It's not set on the strategy, but it's right there. You would have taken your profit probably like right here, and then came back up, gave you another entry, right? And then you just basically follow the trend like that. That's how they do it. And you see how it would have entered you again at the same spot and give you a take profit. This one probably right here. And so then you got your 5 waves downwards. You see how the moves are getting smaller. Like that was what we talked about in the last video. And then this one here was a bigger reaction. This is a Gann's rule, one of the better rules in Gann. This is the reaction that you're going to want to watch for the next trend. If it breaks this, it's done. So for the measured move now, you're going to have to take from the high like that. So the skill in the measured move is about taking the right pulls. Right, taking the right pulls is what it is. And how I managed to figure out which pulls are the right ones is by following the Elliott wave theory. The Elliott wave theory gives you the right pulls, in my opinion. Okay, so the measured move is a great strategy, but at the end of the day, you have to know where to pull the measured moves. And generally, like this one's good, right? You hit your target. By the way, guys, these are serious trade setups. We're talking about this was a short. You want to enter like right there. Your stop would have been like right here, and your take profit. Look at that. That's a 4-to-1. I think it's a 5-to-1 RR all the time. You would have got one there. That's 4-to-1. You would have got one right there. That's 4-to-1. That's literally, you're collecting ammunition, guys. So that's what a day trader does. And how long did it take? This took about 1 day. So in 1 day, you got like 2 trade setups. You put your stop loss, you go for a walk. You know, you put your take profit, you go for a walk. You take care with your other business, or you go hunting for altcoins. And so, in the measured move, we're going to get more into it in the other series. I highly suggest that one. It's really good. And of course, I'm going to do the Elliott wave theory afterwards, after the measured move. And let me just move this up right now because I can't because I'm not the server guy. But anyways, let's go ahead and take a look again. Holding above the breakout region. So this will generate, and pick your strategy, which one you like the most, right? I like them all, and it just depends what market that we're in. Like, but the measure move guys are very consistent. Okay, so we're gonna watch that series. It's gonna be after this one. So you want to see a clear breakout of the ceiling of resistance and a price holding above the breakout region. This will eventually, generally, start of a new trend, and by effort, the volume, as traders enter the market and close their previous positions. So basically, when at the bottom here, when shorts close their position and enter longs, that's what causes the price to go up. And I'll tell you a little secret here. Some public traders or noob traders will have short positions stacked. Well, right here is not really that bad, but like right here, for example. And then you see this high volatile move upwards, and say that a bunch of short, and I've recently explained this in a Bitcoin analysis, that once the move pushes up really fast, accumulates lots of volume, a high probability of those are shorts. And what do you think happens next? It's a short squeeze once these guys have to cover, and if the bulls are strong enough to keep the 50%, these guys are definitely going to get wrecked. They're going to get wrecked. Especially if there's a lot of volume, right? That just means there's a lot of shorts opening the market. Excuse me as I sip. So yeah, keep in mind, the low volume breakouts, they're often bull traps, or to trap traders in weak position. So these are like stop hunts. And high volume breakouts are valid moves that lead to stronger, more powerful trends. Just like if you're getting filled right here, the shorts are getting filled, you're expecting and anticipating their short squeeze. So you're going to want to work with the bulls. You're going to want to work on the side of the bulls to push and squeeze. That's the game that we play. It's the market. Okay. So that's the valid moves leads to stronger, more powerful trends. And yeah, so after these guys, the shorts take their loss, generally, if they're really public, they're going to long it. And a lot of times, if we're in a very active market, and they're gonna want to revenge trade, they do it with high leverage. So that's where you gotta watch the tops, because at the tops, these bulls are high leveraged. They're over leveraged at the tops, and under, what's the quote? I literally made a quote. It's traders are over, like bad traders, like public traders are over leveraged at the tops, and then they're undercapitalized at the bottoms. Why are they undercapitalized? Because they lose so much value on, and they can't buy as much as they could have, because they should have been short, or so they're undercapitalized at the bottoms. You're going to want to save and preserve your money at the bottom of the markets if you're preferably a long player, because you can make more percentages and whatnot. But so yep, that's what you want to keep in mind, right? And so keep your capital so you can get some good prices, and then watch the tops, because there's going to be over leveraged long traders. Revenge trading. This is the psychology of the markets, of market players. Okay, so anyways, so the high volume breakouts are valid moves that leads to stronger, more powerful trends. The law of effort versus result. In order to have the result to continue, you have to continue the effort. That makes sense? In order for the flames of a fire to keep burning, you have to add more wood to the fire, right? You have to stoke the wood, you have to take care of the trend. In order for it to continue, you have to keep adding to the trend, to the flames, to the fire. Okay? So, real demand and volume causes prices to move. So yeah, I mean, if you're talking about a different market or even the crypto market, you have to measure what's real demand. Because if you can find an asset that's going to be in real demand and the volume will confirm it, it will the volume will cause prices to move. But the real demand, how do you figure that out? That's by doing your own thinking. That's by thinking about the market, thinking about the economy, thinking about the world, thinking about the money supplies, money transfers, printing. All of that stuff is necessary for your success in this market. Okay, so let's continue here. Breakout of congestion caused by supply or demand. And I believe I made a very recent video here explaining how we are going to do it, money flow, money transfers in the crypto space, because TradingView is such a good tool if you know how to use it. They have good like dominance coins and stuff like that that will help us figure out which coins is gaining the most dominance, gaining the most priority, in the market, what has the most demand, and we'll be able to anticipate what's going up and what's going down. So the breakout out of a congestion caused by supply or demand forces. Okay, this is important that you really understand this. This is lesson 1. I know I didn't cover it in the best of my abilities, but supply and demand forces is extremely important to get that concept down and meditate, think about it, because it is the thing that what did we say right here? Governs the price movements. Okay, so that was the first in the series. So it governs the price action. This right here is high volume. You can see that's a demand, obviously causing the prices to break outwards. It breaks and holds above the old ceiling, which is important, right above probably an EMA. Whenever it starts to trend like that, I like to put an EMA on the chart, because it's pressure, right? Everybody kind of uses the moving averages. I noticed in crypto, the measured move too, but I mean, so we kind of have to keep these strategies a little bit secret, I think. I mean, I'm not sure exactly if we should keep it secret or if we should share it. Because if we share it, we can actually have more, and we can have more influence on the trend, right? But if we share it to too many people that actually want to go against us, that's not good. So again, that's why I want to keep this Discord group a little bit more exclusive, and then the YouTube as well. My subscriber base is not the best. I mean the highest. But yeah, and even if it was, maybe I'll just look to keep the Discord exclusive, and then share like YouTube thoughts on our concepts, but not explain in detail. We'll see, because we still need to make tradable VPA setups. We don't have stop losses or anything like that, and that's the thing that you can't really tell. You shouldn't really want to tell a lot of people. So yeah, supply or demand forces. Again, the stop losses are going to be supply and demand. It is one force of supply and demand. So realistically, I should probably look supply and demand forces, because you need to know, like, for example, stops. Okay, that's a supply demand force. Want, desire, like really needs. Those are demand forces. So you actually should probably split them up and take your time and actually write down demand causes and supply causes. Supply causes is a little bit easier when it comes to crypto, because it's pretty obvious, right? BTC 21 million supply done. Where is it going to come from, right? Those are the questions that you want to ask afterwards. Who has them? What causes is going to happen? Who, what, where, when, how? Ask questions, and that's going to give you answers to those questions, right? So Yeah, and same thing with demand. What's going to cause demand? Who's going to cause demand? Why is demand going to be caused? Who's the big players? Binance is a big player. There's different exchanges, institutions. What's going to cause a huge demand in crypto is an ETF type of money flow, right? That's the bigger thinking economy, and that's the stuff that's going to get you into the right state of mind to actually have the right confidence and knowledge to be able to take the right trades. And the tactics are going to help us capitalize more so on very strategic risk reward trades, opportunities that are going to actually get us paid. Okay, so same thing right here. Break above, rising volume, and then continuation of trend. Use an EMA for this. Same thing at the bottom, use an EMA. Typically, the breakdowns are a lot faster and heavier than the upwards, but to be honest, in BTC, they're both pretty fast. I mean, the uptrends are pretty fast, man, but the downtrends are also fast. So yeah. See how this, and then this is fast as well, and that's like very fast. So yeah, that's what I wanted to show you, how strong the force is. So remember the testing phase? Here it is again. The market makers are testing the market, seeking how much supply. Always ask questions, how much supply they need to absorb. Because this is the questions that they ask each other. How much supply do we need to absorb? How much supply is it going to cost us? How much is the supply going to cost to see if it's worth pushing up and trending upwards the prices? This also means that you must watch for how much demand is in the pattern via volume indicators. So these guys are smart enough to understand where the demand points in the trend are going to, where other people are going to follow. All right. So the big, huge market makers they're smart enough because these are the guys that are controlling the lows and the highs. They try to control the market, right? Because they want to kind of get followed, right? But of course, with that amount of risk, there's more rewards. But with all the rewards, there's more risk. For a market maker, these guys are talking millies and billions now, and the billions of dollars. When we're talking about the crypto space, I mean, like we checked on the in the video, it's 1.8 trillion right now as we speak in 2021. Right? So is that going to continue to go up, or is it going to go down because of a cause in the economy that would cause it to go to zero or less? Not less, but or is it going to cause it to go to the moon? And that's what the crypto people are really hoping for. So keep in mind the testing phase rule. Right, it breaks out. This is the top right here. You want to see a test confirmed on low volume, right? Like we just said in the testing phase. Go and watch it again, or take a look at the Discord testing pattern. Let's open it. Actually, this repetition and mother of all skill. Low volume came up. This is a good test. It's a bad test if there's a lot of demand. Let's go back here, pivot. You want to see low sells because you don't want to see a lot of people selling. You don't want to because this would increase the risks of the market makers, because this is the market makers that are supporting this, right? So if there's a bunch of sellers, they're like, oh no, that just increased our risk 100%. We have to sell this, we have to take it, and then. So keep in mind that the testing phase rule, you want to see a test confirmed on low volume. This indicates that the market makers have done a great job accumulating the overhead hanging supply, and they're ready to push the prices to higher levels. Okay, so the point, and this is again the insurance, right? The point of this, their job in accumulating the overhead supply was in here. They need to accumulate all the supply so that they can trend the market, and this is their insurance that they have done a good job capturing the supply in the market. So the volume's rising on the breakout, which is a good thing. They're absorbing all the supply, and the volume is low on the reversal, right here. So same thing on, oh no, this is the continuation of the move. This is good. So this volume increasing is a confirmation that the trend is continuing according to the first law, the effort versus result. Sorry, not the first law, the last one. According to the law of effort versus result. A trend should continue until it doesn't have enough volume to cause it to continue. Effort, right? Same thing with the flames in the fire. A trend should continue until it doesn't have enough volume, or enough wood in the fire to cause it to continue to burn, to continue to trend. This is what you want to see in a continuation of the trend pattern. You want to see the continuation. You want to see the volume increase. You want to see the wood continue to come on the fire so that it doesn't go out. So especially at the bottom of these ranges, because that's where a lot of people panic. A lot of people are on the wrong side of the market, and that's where the fires get like, whew, the fire's huge right here, and they don't want it to stop. And that's why if you go on BTC right here, they don't want it to stop, so they just continue it. That's a real bull market, a parabolic bull market, because they're not looking back. They're not looking back. So the waivers, they think that this is 1, 2, right? And we're gonna 3, and then this is 4. This is either 5 here or 5 here, and then this would be the A, B, C. That's what my count is. But of course, this looks like a leading diagonal as well. It's just that this would be the A, this would be the B, and then the C would come down so low. The target on all of these are the 4th waves, which is right here, and we don't want it to go lower because then it would not look as attractive. But if they really want to accumulate within the next coming years, if we're talking 5 years, I don't know, man. What is really Bitcoin? What is Bitcoin, right? What is Bitcoin blockchain, right? These are the causes that is that going to cause so much demand, right? Demand of the block in the blockchains. For every Bitcoin you own like a block in the blockchain. Like, is that what it is? Ownership. So let's continue here. Comments if you have the answer to that question, because again, this information is good. You need to understand the markets, right? We need to help each other in the areas of supply and demand, and what's going to in our thinking, so we can clarify what's going to cause. And that's what the YouTube channel is for, is to share, and then that's what the Discord's for, to attract the right type of information, so that we're thinking right. We're on the right side of the market. We're on the right side of the trend. So you should always understand what's abnormal volume versus normal volume, and how that affects the price action. That's why I have my average volume there. aka how much volume does it normally take to move the market. And then once you have that perspective, you kind of know what's a bull trap and a bear trap. This is also where you're going to know where some other traders are trapped, right? Exactly what we just said. So due to smart money algos, smart money algos selling to the public. This applies to the law of effort versus result. When there's no more effort, there cannot be any more result. The result is the uptrend or continuation. The effort is the volume. So that's it for this one here. The next video we're going to cover trend lines. That's going to be exciting. Oh wow, 30 minutes on this one. Let's go right away.